This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, August 25th, 2015. Euro dollar. So the euro surge continues with the market trading all the way up to fresh multi-month highs at 7.5-month highs at 117.15 ahead of the latest minor pullback. At this point, with the market taking out critical resistance at 14.67, we could see additional upside in the sessions ahead that takes us up to next key resistance in the 18.25 to 18.75 area. However, daily studies are now starting to look a little stretched, so there is a possibility for a bearish resumption back below recent lows that we saw last Friday, which come in around 112.30. But a break back below 112.30 would be required now to put the immediate pressure back on the downside. Sterling dollar. So cable remains very well supported on dips, with the market now trading closer to that 2015 peak at 159.30. At this point, any setbacks should continue to be very well supported, while ultimately only a break all the way back down below 153.50 would compromise the constructive outlook for cable. Dollar yen. So dollar yen saw those violent declines extend in Monday trade, with the market trading all the way down just shy of 116 ahead of the latest sharp reversal. At this point, we can expect to see some consolidation in the weeks ahead or the days ahead after the market has seen such violent price action over the past few sessions. Look for rallies to be very well capped now ahead of 122, while any setback should now be very well supported ahead of that 116 barrier. Really, we need to see a break on either end now for clear directional insight, so a lot of choppy price action is expected over the coming sessions. Euro Swiss. Euro Swiss remains highly constructive, with the market holding above critical previous resistance now turned support at 106.90 and poised for an eventual upside break beyond recent highs at 109.62 and through 110 further up. At this point, any setback should be very well supported in the 105.75 to 106.90 area, while only a close below 105.75 would compromise the recovery outlook for Euro Swiss. Aussie dollar. Aussie dollar is broken down to fresh multi-year lows on Monday, with the market trading just shy of 70, trading down to 70.40. At this point, which technical studies are a little bit stretched, so we could see a bit of a consolidation, a choppy consolidation, before the market looks to resume the downtrend. Ultimately, any rally should be very well capped in this pair below 74.40, while a break back below 70.40 would open an acceleration down below psychological barriers at 70. Dollar CAD. So dollar CAD has traded up to another fresh 11-year high, with the market trading to the 132.90 area ahead of the latest minor pullback. Ultimately, the structure remains highly constructive, and any setbacks are viewed as corrective, with the higher low sought out in favor of fresh upside towards next key psychological barriers at 135. Really, any setbacks should be supported above that 128.60 high 128.60 low that we saw going back to the 29th of July, with only a close below there to compromise the highly constructive outlook. Kiwi dollar. So Kiwi saw some sharp declines in Monday trade, with the market trading down to its own fresh multi-year lows, just shy of 60, trading down to about the 61.40 area. At this point, though, the market has quickly traded back into some familiar territory above 65, and we can expect to see, although the downtrend remains intact, we can expect to see a lot of choppy consolidation before the market decides which way it wants to go next. Ultimately, though, below 67.40, the downtrend is firmly intact, and only a break back above 67.40 would compromise that current bearish outlook. SPX 500. So the S&P 500 has been in collapse mode over the past several sessions, with the market trading down to fresh multi-month lows just shy of that critical 15th of October low at 1890. At this point, look for any rallies to now be very well capped in the 1940 to 2000 area in favor of the next lower top and a bearish resumption below 1890, and then 1800 further down. Gold. So gold has been very impressive in recent trade, with the market recovering out from those sub 1100 multi-year lows back above that previous 2015 base at 1142. This sets the stage for a potential more significant recovery and basing outlook, with the market potentially seen back towards that 1233 medium-term resistance in the form of the high from the 18th of May. Really, setbacks should be very well supported ahead of 1100, and only back below 1100 would compromise the newly adopted recovery outlook for gold.